But then he goes on to imply something big was coming to those short sellers. And I warned this would happen, people. To me, this was as you put out a tweet that's rather then announce that you're about to dump a ton of shares on your investors and then the tweet? That's absolutely. What's up, everybody? It's been a wild week so far in the stock market, and it's only Monday. So hit that like button, get comfortable, because we've got lots to cover today. So the first topic in today's video revolves around Nikola Stock, and all I gotta say is what a show. First, let's talk about why the stock tanked and is still tanking and probably will continue to tank. Shares in Nikola, ticker symbol NKLA, plunged almost 15% after hours on Friday as the maker of the hydrogen-fueled vehicles filed an offering to sell 23.9 million shares of common stock. Okay, not the end of the world, right? Well, the stock dropped as low as $38 a share as of this recording, and it's not looking like this is where the bleeding stops. According to the SEC filing, the 23.9 million shares of common stock are issuable upon the exercise of 890,000 warrants, which were originally issued at a private placement in connection with the initial public offering of the VectoIQ or VTIQ, and up to 23 million shares. The company expects to receive $11.50 per warrant and generate up to $274 million in exercise of the warrants. Okay, let me just pause, because we kind of already knew this was coming, right? We knew what this IPO was all about, and that, we were just waiting for this to come about, but that's significant. Eventually, these people who have invested in Nikola would want their money back, and with a par value of $11.50 when the stock was up over $55 means that it was a damn good time to take profits. Before this recent crash, that's 500% just at $55. But wait, there's more. In addition to the preliminary share prospectus disclosed that any shareholders may offer from time to time to sell 53.4 million shares of common stock. So what does this mean? It means that Nikola can dilute this stock at will to the tune of over 50 million shares on top of all of those warrants. These are shares, folks, that are getting dumped, not dollars. We're not talking about $50 million here. We're talking about 50 million plus shares. That's a literal ton of shares. When last reported before the merger, VTIQ's share structure had only 29 million shares outstanding total. Now, that share structure will nearly triple in size. That is absolutely insane and not good for you as the investor. Former CEO Trevor Milton was tweeting all day on Friday as if this was a great day for the company. He tweeted out after the filing saying, quote, S1 has gone effective, finally. All the fear-mongering is insane, and it'll be nice to have the PIPE investors registered. It'll show who's long and who's not. The fear-mongering can go away finally. But really, it isn't. Not when you have 53 million shares waiting to be dumped, Trevor. No one likes an offering. Nobody likes dilution, especially one of this size. And the huge rub for me was a deleted tweet from him also on Friday, just hours before the filing came out. This one said, quote, I hear August is pretty hot temp-wise. Don't forget your shorty shorts, kind of implying what Elon Musk has been saying about all of his Tesla shorts, but this is a completely different situation. But then he goes on to imply something big was coming to smoke those short sellers. To me, this was as and you can't explain this away. You put out a tweet that's rather pumpy, then announce that you're about to dump a ton of shares on your investors and then delete the tweet? That's absolutely ridiculous. And I warned this would happen, people. There's no way they weren't going to do an offering, and this is about the worst kind you can get. I'm willing to bet that that's probably not the last offering we see from them of this size, but that remains to be seen, obviously. But in my opinion, the stock is going to continue to tank on this, and I would love to hear your thoughts as well. Do you agree that the stock isn't going anywhere but down from here, or are you still bullish on this after the filing? Are you angry about the way this was handled, or do you not think this is as much of a big deal as everybody else thinks it is? I would love to hear your thoughts on this, so be sure to drop a comment below. Okay, next up, the remote work stocks are back, people, and it is glorious. All last week, these stocks pulled back, and rightly so, but I told my Chaos Crew folks all week that these are going to be great opportunities to buy the dips on them, and boy, did they ever pay off today. Stocks such as Zoom, Amazon, CrowdStrike, Lululemon, and Fastly were all a classic case of buy the effing dip last week. Which, by the way, if you would like to be a part of the Chaos Crew, you can do so by simply clicking the join button next to the subscribe button or the link provided in the description. Get daily watch lists for me, as well as some pretty sweet custom badges and emojis to use during my Stock Watch Sunday live streams. And for $4.99 a month, I think it's a pretty sweet deal. And if you agree and would love to help me support this channel, I would love to see you there. So why did these move? The answer is simple. Nothing has changed. Are we seeing some positive news about the Rona vaccines? Yes and no, and we'll get to that in a second. But people are still working from home and will continue to do so even if we have a vaccine. I can't tell you how many of you in my community have already told me that many of their businesses that they work for already has stated that work from home is here to stay. Somebody just told me this morning that their company just informed them that remote work will be in effect for at least the next year. These stocks will only continue to move upward and onward, in my opinion, and become increasingly in high demand because of that fact. Companies like Fastly, ticker symbol FSLY, which came roaring back today, I can see flying right back to $100 a share or more very soon. Stocks like CrowdStrike or Palo Alto are going to be solid throughout this new era, as that there will be a ridiculous need for increased cybersecurity. I wonder if Twitter should be reaching out to them. And of course, we saw Lululemon and Peloton rally back to their highs. Why? Because these companies are in such high demand right now that they can't keep up. Try ordering a Peloton bike right now. It'll take you 8 to 10 weeks to get one. Not only that, but Peloton CEO just stated that they are aiming to roll out an even cheaper treadmill in the very near future. And in my opinion, this company that creates stationary equipment is actually going places. And we can even go away from stocks that are solely surrounded around tech and talk about companies such as McCormick, because if you're home more, chances are you're cooking more, which probably also means that you're going to be buying more cookware from Williams-Sonoma, which has always been a channel favorite since it was sitting at $49 a share. Or hell, even Amazon, which had pulled back 10% last week, but was yet again upgraded this morning by Goldman Sachs. Clorox owns many household brand names that will continue to increase in demand, as well as the obvious Rona-killing Clorox wipes. And the list goes on, folks. In my opinion, we are seeing a huge shift in the way the economy will be run and the way that we invest. But now I actually want to turn that back on you. Were you once skeptical about remote work being here to stay and you've had a change of heart? Or do you think things will eventually go back to the way they once were after a vaccine comes about? Let me know in the comments, as this is a perfect segue into the next topic, which is all about the upcoming vaccine. Remember when I said just last week about the race to a vaccine is that if you weren't first, you were last? Well, it would appear as if Astra Zeneca, ticker symbol AZN, could potentially be pulling ahead of its rival Moderna Therapeutics. Moderna was absolutely smoked today on multiple fronts. Oxford University and AstraZeneca, ticker symbol AZN, had published promising data from an early-stage trial of a key coronavirus vaccine study, and Moderna also received a downgrade from JP Morgan. Talk about a double whammy. In a study that was just published today, Oxford and AstraZeneca's coronavirus vaccine trial showed potent boosts to the immune system in all 1,077 participants in a phase 1, phase 2 study. The vaccine increased levels of both protective neutralizing antibodies and immune T cells that target the virus, according to the study organizers. AstraZeneca's shares rose as much as 10% pre-market, but have come back down as researchers cautioned that the results were preliminary. A positive outcome had been widely expected after reports last week lifted the stock, with the vaccine already in more advanced trials. Combine that with an unrelated downgrade from JP Morgan to neutral from overweight, it absolutely annihilated those shares of Moderna, and as of this recording, the stock sits at $82 a share, which is down more than 13% on the day. So is it now time to buy the dip on Moderna or even AstraZeneca? Honestly, I don't think we really know any more than we did previously. There's no question that Moderna was very overpriced, and as far as AstraZeneca goes, I really think that they could be in contention to win this race, in my opinion. They actually got started later than many of its competitors and have already caught up with them and are even surpassing them, which speaks volumes to me personally. Not only that, but AstraZeneca has proven to create successful drugs in the past and has them currently in the open market, which is actually making them real money. Moderna, well, they just haven't yet. Let's not forget that well-known Pfizer and BioNTech are also very much in this race, and therefore I think all of these come with their own inherent risk. With Moderna, though, whose price point is higher than that of Pfizer and AstraZeneca, ask yourself, who would you trust more? Because now at this point, it's not a question of price, but who can actually develop a vaccine first and who can execute it better. Moderna has already kind of shown us that it really can't be trusted with its recent controversial insider selling during major events, along with huge billion-dollar offerings. Does that mean you shouldn't invest in them? Not necessarily, because I do think that if they pull this off, the stock will go absolutely nuts. Having said that, I would choose to invest in companies that I actually can trust, and so if I had my choice, it would probably be one of the other two, or both. They've already been pretty outspoken about working together to distribute this vaccine once it's ready, so others may stand to benefit. And so with all that being said, let me know what you guys think as far as who's going to come out with a vaccine first. Also, are we closer to getting ourselves back to the normal we once knew, or are we now entering a new era in history? Let me know in the comments below, and if you happen to miss last night's Stock Watch Sunday, click this video here, or if you'd like to know more about the remote stocks that I was talking about and I absolutely love, click this video here. Please like and subscribe. And as always, folks, I will see you all before the bell. And B. Smith is out.